We're going to be getting started here in a minute, ladies and gentlemen. We've got some crypto news today. We're going to run through this news very, very quickly. This is probably going to be a shorter live stream, I think. Once you come into the live stream, say hello, smash that like button. Welcome to the stream, ladies and gentlemen. Glad to have you. This is Crypto Wealth. We're going to be looking at the news today, some news from today and yesterday. We're going to be talking about, man, we got so much to do today. We're going to be talking about what's going on with Pulsechain. 100 million plus, 117 or 70 million plus has been moved around from the sacrifice wallets or some big whale wallets, we'll put it that way. We're going to be looking at where some of that money went. What does it mean? A lot of people are trying to guess and speculate. I think it's pretty clear. I don't think there needs to be a lot of speculation. We're going to look at live trades on camera today. I'm up over $80 in one account just for today, and that's only a $10,000 account. I'm going to be making some perpetual trades on today. We're going to be selling some options today on camera with Lyra protocol, and it's going to be an excellent live stream. So thank you so much for being here. Do me a favor, smash that like button. Let's get that algorithm pumping. All right, let me make sure I've got it here. Where are we at? I'm trying to pull up my stream on my phone so I can watch the chat easily. Should be getting started. All right, once you come in, just say hello. Going to be getting started here in a moment. I always have trouble pulling up my live stream on my phone. Not sure why. I figured the 2-minute countdown would give it time to populate. Maybe it's because it's in the app. Oh, time to go. All right, hang on just one moment. Let me try one more thing. Let me pull this up on my phone here. Let me see what we got. Let me try it again. It's trying to show me my watch history. I don't need to see my watch history. I need to see my videos. There we go. There we go. All right. Finally pulling it up. Awesome. All right. Once you come in, do me a favor and say hello. Hey, Pedro, welcome, welcome. Let's get into this. Okay. Quick look at the price. 62,000. Holding 62,000 pretty strong right now. And 24 hours we're down 1%. Not a whole lot there. Looks like we're cooling off from that big move that we had earlier in the week. I got a buddy of mine who just messaged me before I went live, and he is convinced there's been a little bit of market manipulation. He feels like, you know, that this market was headed to 69,000. He is pretty convinced that's where we were headed. He was thinking the next sort of cool off point would be 70,000, and he feels like there's some big players that are trying to cool off the market and selling into the market. I don't understand all the rationale for what he was saying. I mean, any of that's possible. Let me know your thoughts down in the comments, ladies and gentlemen. All right, let's go ahead and get started. Let's look at some news very quickly here. So this is, we're just gonna run through these news headlines. Then we'll make some live trades on camera. And then I'm going to show you how you can make some trades fee-free. I just realized that actually this morning I've been making some trades on one platform, and they've been reimbursing me for my fees. In fact, I've been making a profit on my fees, and I didn't even realize that. I'm going to show you that as well. So let's get started. This headline here, Bitcoin bulls just joining the rally are very late to the party, analyst says. And they talk about the RSI being overbought, including the fact that we're above 60,000 right now. This just reiterates what I was saying yesterday and the day before on live streams. A lot of people are getting excited right now. They're jumping in the market. We are very, very late to be jumping in now. This is the time to be taking profits. This is not the time to be jumping in. This is not when you stack on your hodl bags. I mean, we're about to hit new all-time highs. So you don't want to be doing that necessarily. Don't be afraid to take some profit. If you're dollar cost averaging into the market, then of course you just keep dollar cost averaging no matter what. But at the same time, you have to be aware. Look, I mean, I'm going to say this in every stream. If you come back over here to the CoinMarketCap, look at the fear greed. We're at 85. I mean, how much higher? It only goes to like 100. It's 0 to 100. How much higher does it go, ladies and gentlemen? How much higher? So don't be afraid to take a little bit of profit if you want to. Listen, people are always afraid to take profit because they're afraid the market can go higher. And you're right, it could go higher. But it is never a bad idea. There's no such thing as losing if you're taking profit. And people are always like, oh, you were such an idiot. You sold too soon. No, I didn't sell too soon. I made a profit. Period. Period. That's important. You've got to take some profit. All right. So let's keep going here. The SEC overstepped their bounds in the Kraken lawsuit. State AG's charge. So this is very interesting. This news article is talking about how several of the attorney generals of various states are basically filing kind of a friends of the court type claim against the SEC. And they're basically saying the SEC could be hurting consumers. No kidding, of course. The SEC could be hurting consumers, and a lot of the state AGs are saying this is not the SEC's place, and they're saying this is the place of the individual state attorney generals. Now, on the surface, when you look at something like this could look very, very good, and it could seem like the state attorney generals might kind of get it. But the reality that you need to know is this is probably also very political. Some of the very same state attorney generals right now that are going against the SEC will most likely bring their own charges in the future against cryptocurrency within their state. And the reason they do this is because it looks good for them politically if they can win a victory. If they think they can win a victory, then they will. It can look good politically. In fact, going against the SEC here and coming out on the right side of this, again, it makes them look good. Politics is the number one motivator when you see lawmakers making decisions. Oftentimes, you always have to ask yourself, what do they know about the market that they're making decisions on? And are they really, is it really about the market? Is it just about politics? Is this really their core belief? Is this some sort of ethical, moral agenda they're pushing? Or is it something a little sinister behind the scenes? Is there another motivation? Typically, there is another motivation. It's politics, right? Next up, WorldCoin drops as Elon Musk sues OpenAI. Now, this is interesting. I'm less concerned with WorldCoin. I'm more concerned with Elon Musk. I found this news story over here on Cointelegraph. Elon Musk sues Sam Altman, OpenAI, over agreement breach. So this is Mtron. Welcome, brother. Welcome. This is a very interesting story here. Essentially, Elon Musk has always feared, to some degree, AI. And originally, he was a co-founder into the OpenAI company. And originally, basically, they had a bit of an agreement that this was going to be an open source type thing and is all about protecting humanity. But that's not what has happened so far. And basically, Elon Musk is saying, hey, they're going to a for-profit model. They're no longer open source. And he's concerned. And it's interesting. I've been following this a little bit, and this whole lawsuit thing is very fascinating. Another thing that doesn't come up in this article with Elon Musk is I saw an interview not too long ago where he talked about how OpenAI claims that they have not breached any sort of copyrights. They're not sharing, people's information, people's intellectual information, for example. And Elon Musk is like, that's just, he said it in the interview, he's like, that's an absolute lie. Like, the open AI only exists by essentially scraping the internet for all this information, every news article, every text that's written, everything that's publicly available, and then they're regurgitating it. And according to him, that is definitely a breach of a lot of copyright standards and stuff like that. It's going to be interesting to see how that whole thing plays out. AI is interesting. Don't sleep on it, ladies and gentlemen. Do not sleep on AI. It's very interesting technology. At the very least, keep yourself aware of developments in that space, what it's doing and what it's capable of. But don't fall for all the marketing. Please, ladies and gentlemen, as one of my viewers of my channel, I don't want you to fall for this. There's so many cryptos out there that's, oh, this is an AI crypto, and it's not. They're just trying to sell into a trending narrative right now. So be very careful for any crypto project that claims that it's AI, because most of them have nothing to do with AI other than the name. All right, next up, we've got 4 more stories, or 3 more stories, and then we're going to get to some trading stuff or some DeFi news type stuff. Pulsechain. We'll talk about that here in a moment. Okay, Bitcoin ETF see record high trading volumes as retail investors jump on the crypto rally. The only reason I brought this up is because I've been a lot of people in the crypto space are not differentiating between retail traders and like hedge fund asset managers. And a lot of people are like, oh, big money's coming into crypto, big money's coming into crypto. It's just important to understand that the Bitcoin ETFs are still driven mostly by retail investor demand. That's what's important for you to realize. It doesn't mean that, you know, certain like retirement funds out there can't get into the Bitcoin ETFs, because they can, but it's still very much a retail driven market. So be aware of that. This is a good thing. I mean, I prefer to see retail investors investing through ETFs and those sort of things. I would much rather see that than I would to see, you know, just a big hedge fund coming in, you know, by themselves. I mean, at the end of the day, I want it to be a decentralized market, which is not a Bitcoin ETF. But on top of that, I want it to be, if it's not going to be a truly decentralized market, then I want it to be as much of a consumer-driven market as possible. That's me. That's my idealism. That's how I feel about it personally. So if you disagree, let me know in the comments. And if you have any questions about anything, my thoughts, my ideas, please let me know in the comments. And while we're here, do me a favor and smash that freaking like button, ladies and gentlemen. All right, let's keep it going. Yeah, we already covered that one. I wanted to show you this right here because I think this is important, and not enough retail investors are aware of this. The US, and I mean what I'm saying by this is not a lot of retail investors are aware of what developers and various crypto protocols are having to deal with. And I think this story here, if you understand sort of the backstory of what people are dealing with on the business side of crypto, then I can think it can make you a little bit smarter of an investor when you're looking at various projects. By the way, I should say nothing in this video is financial advice. I'm not a financial advisor. I'm just a very biased cryptocurrency YouTuber. I'm the guy who thinks Bitcoin's probably going to go to $1 million one day. All right. The U.S. SEC Commissioner Hester Pierce said at ETH Denver that the litigious market watchdog is currently operating in an enforcement-only mode. When regulated crypto industry, Pierce bemoaned that a regulator needed to attend Ethereum-focused crypto gatherings while stressing the need for crypto rules. And then he went on to say this: what I reflect is the fact that you all are spending part of your brain power wondering how to avoid getting sued, she said to the conference's packed main stage. If we had clearer rules, you could focus on building. And that is absolutely right. Big smoke. No, I've been following DripX. I'm not personally in it. I have been following it. Welcome, brother. So here's the thing. I want to recap this right here. If we had clearer rules, you could focus on building, as opposed to using part of your brain power right here, as opposed to using part of your brain power to wondering how to avoid getting sued. This has been a problem in crypto almost from the beginning, especially when when it became aware that lawmakers and legislators and regulators, really regulators, were paying attention. Part of the reason you see, for example, Richard Hart, who's been on camera, but part of the reason he's very much been private about where he's at, where he lives, and things like that, is because he always knew that getting sued was a risk. And one thing I have always admired about him is he's always showed himself on camera while maintaining personal privacy, but understanding that he's been able to develop into the headwinds of an environment that is ripe for lawsuits from regulators, which of course he's getting sued right now, unfortunately. And all of these companies, everything from Odyssey that got sued and lost, the Kick token way back when ended up getting sued and they lost as well. All of the Binance getting sued right now, Coinbase getting sued, all of this mess. Whenever you see developers that don't want to dox themselves, it doesn't necessarily mean that they're shady developers. It could mean that, but it doesn't necessarily mean that they're shady developers. It also could mean that they are trying to avoid a lawsuit. You know, one of the projects I mentioned yesterday, Bean.money, those developers were private. They went under a pseudonym called Publius. It came out, it ended up being 3 guys. They doxed themselves when there was an exploit to try to get everything back on its feet and that sort of thing. And then they basically have went silent again. And a lot of people in that community are upset that they're silent. And I'm like, it's obvious why they're silent. They understand the lawsuit risk. That's the thing. Like they understand decentralized cryptos are at risk, and any founder who found those cryptos is at risk. I mean, all you got to do is go back to Tornado Cash. The developer of Tornado Cash created that protocol when there was essentially no laws, and he didn't create that protocol. He didn't break any laws when he created that protocol, none. But yet the man has been put in jail or whatever for developing Tornado Cash because all of a sudden they said it was designed to be created for money laundering, which it could not be further from the truth. It doesn't mean money launderers didn't use it, but that's like saying the US dollar was designed to be money laundered. It is the single largest financial asset that gets laundered today by far. But no one would say, oh, the dollar was created to be money laundered. So these developers understand some of the risks they're taking. So I'm always been a fan. I have always been a fan of developers being anonymous at its core. So in fact, sometimes when I see a protocol that I think definitely goes against possible regulations, definitely like I'm like, this thing is definitely looking like what the regulators have called a security so far, and I see a team out there with their faces, their names, and all their social media profiles, I am oftentimes skeptical, like, oh, this is some sort of pump and dump. This is not going to be legit. By the way, just because a dev docs themselves and goes on camera does not mean that they are good people. I mean, we've had so many projects. Oh, what's that freaking one I'm thinking of right now? What's the project that everybody's in, the one coin? Oh, I'm drawing a blank. Anyway, that developer has gotten in jail or whatever. I'm getting off topic, but point is, we've had plenty of people on camera, CEOs and developers, that ended up running scams. So I think it's wise if developers want to stay undoxed if they're trying to create something real in this space. That doesn't mean that they couldn't be a scam. You just got to be careful. But I don't think doxing or undoxing themselves makes them necessarily legit or not legit. I can understand why people want to stay undoxed in crypto. All right, next up. This is just a fun little story to pay attention to. It was big news after the Bitcoin ETF came out. Vanguard, one of the largest, which by the way, somehow Vanguard and BlackRock are somehow in cahoots together. I don't know the full backstory, but the BlackRock ETF comes out and Vanguard comes on the scene. The CEO says they're not going to allow their investors basically access to the Bitcoin ETF. And now he's going to be retiring. So the question is, will the new guard who comes in now, not Sam Bankman-Fried, not SBF, it was SafeMoon, that project, SafeMoon, that guy, that's what I was thinking of. But they're changing guard. So is a new guard going to be more receptive to the Bitcoin ETFs? We'll see. Here's what I feel confident in saying this, again, not financial advice. Anyone who is still shunning Bitcoin, I mean, you just don't know. You don't know why it was created. You don't know why it's necessary. You don't understand outside of the gains alone. You don't understand why someone would want to own it. Or, if you don't understand that, if you can't see that, if you can't look, I mean, with all his infinite knowledge, when you hear Warren Buffett say that he can't find anything to buy because the entire market is essentially overbought and he can't find any good deals, and he's been saying this for 2 or 3, 4 years now. That is literally one of the reasons Bitcoin exists, because part of the reason the market's overbought is because of some of the inflation risk and some of the macroeconomics at play. Essentially, some financial manipulation going on. The idea that you can look at the entire market and find it very difficult to find anything of value for you to put your money into, and you're one of the greatest investors of all times. I mean, that should let you know that there's potential problems here. But I digress. Let's go over here and let's start looking at some trades. By the way, $68. It was $83. It was $83. I was up. By the way, I just got to tell you, so I'm already up for the month. This guy's already up $105. He made $300 last month. He's up $105 already for the month. This guy is up I'd have to go do the math, but I think he's up $200 for the month. Yes, I said the month. What's this? The first? The second? The month. Like yesterday just popped off like crazy. And for this particular portfolio, I mean, I would love to get $1,000 a month out of it, but I'm expecting like $400 to $600 a month out of it. But that's, I mean, we very well could exceed that this year, this month for sure. We'll just have to wait and see how they do, how the traders do overall. I got a link to BingX down in the description, but I'm gonna make a trade here, and I'm gonna make some options trades. You know what? Before I get to that, I want to discuss this. I want to discuss Pulse real quick. So Richard Hart. Man, you gotta love Richard Hart. I mean, if you don't love him, you're just turned off by his personality or something. I mean, you don't have to like the guy. You just gotta love some of his style. You don't have to like him. You just got. I mean, you gotta love his independence. I love that he's willing to strangely go against the grain. I love a human that the whole world can seem to hate, and they just don't care. Like they just give a big part of the world the middle finger because they're gonna do their thing. So a lot of funds got moved around yesterday, which, by the way, go follow this guy, Money Game Crypto. This is his YouTube channel. This guy, shout out to Money Game Crypto. If he sees this video, well done, my friend, well done. This is probably the best channel to watch on-chain movements of the dollars moving. $177 million moved from some wallets. I mean, it's crazy. There's been some money moved over here. Roughly 40 million, I think, just about 40 million, 41 million is the number I think I heard, moved into Pulsechain yesterday. Millions moved into various places with ETH. ETH was purchased and staked. And people were saying some silly stuff. People were like, why would Richard Hart purchase ETH now? If it's his wallets, why would he do it? So the people are like, oh, it's his wallets. Some people are saying it's not his wallets. Why would he purchase ETH now? Because, this is a guy that's supposed to be able to pick the bottom, pick the tops. Why wouldn't he have bought it way back here? He would have made so much more money. And they're looking in their rearview mirror. What they don't understand is, and I do know that Richard Hart presents himself like, one of the smartest humans on the planet. But nobody can predict the market. I mean, nobody can predict the market. You don't have to predict the market. He's making yield plays. When it comes to yield plays, it's less about predicting the market and it's more about the yield. The man, if it's him, if we're assuming it's his wallet, we're going to go with that narrative. He has put what, $100+ million, 90 million, 100 million, whatever the number is. You guys can let me know in the chat. He has put all that money into freaking yield-bearing assets, and that's the play. Like, the wealthier you are, the less it's about trading with your portfolio, and the more it can become about yield bearing. This is why you see a bunch of older people with their retirement accounts going into annuities and CDs and stuff like that. Not an advocate of those sort of things, but yield's where it's at, because one of the things you hear me say a lot is try to be right if you're wrong. When you're earning yield, if you're holding an underlying asset that you believe is going to go up eventually, it can drop by 80-90%, but you believe it's going to go back up eventually, and you're earning yield, that's everything. Big Smoke said, yeah, yield is king. Absolutely, yield is king. By the way, ladies and gentlemen, do me a favor and smash that like button. And now the question is, people are like, well, what's he going to do with that yield? Well, I mean, I think it's pretty obvious. He needs funds to live. He needs funds to fight a lawsuit. And he's most likely going to use it to continue to go back into Pulsechain. I mean, I think that is obvious. Without question, I think that is obvious. Somebody said, plus he probably need to get permission from his lawyer. That's Big Smoke said that. Yeah, I actually saw that came from another YouTuber who said that on their video as well. That's absolutely possible. It's absolutely possible. I don't know if I 100% buy that narrative, but I do believe before he made the move, I don't think Richard Hart needed to. I don't think that months and months ago he could have moved those funds, and he chose not to. I don't think he was worried. I don't think he was thinking about an impending lawsuit immediately. But I do think before he made those moves yesterday, if he made those moves, let's just say that because no one actually knows if those are his wallets. Let's be very clear. We don't know for certain. No, we can't corroborate it. That's by intention, of course. But if he made those moves, then I'm certain he called a lawyer and asked. For sure, he called a lawyer and double-checked. And I'm certain the lawyer told him that there was legal risk. I mean, here's how lawyers work. If you don't know, ladies and gentlemen, anytime you get lawyers' advice in an area that's a little bit unclear, here's what most lawyers will say. Well, first of all, most lawyers are very conservative. They'll say, that's unclear. I recommend you not do it. And then you typically have to ask a follow-up question. Okay, can you give me some idea of my legal risk? And sometimes they'll say, well, you definitely have legal risk. This would be your defense. And they kind of sort of give you the facts of, the risk and kind of a good lawyer. A good lawyer will do this. A lot of lawyers will just say, well, I can't tell you what to do. This is what it is, yada, yada. They suck. When you pay a lot of money for a lawyer, they'll kind of lay out, okay, this is the defense that you have for yourself, etc. I did this years ago in a business I was looking in when I was looking at investing in some offshore casinos long before crypto. And that's exactly how the lawyer responded to me. And I have no doubt Richard's lawyers did something very, very similar. So with that being said, he moved the funds. People are like, what he's going to do with the funds? Obviously, he's going to pay lawyers, he's going to live on them, and he's going to compound some, and he's going to move some into the Pulse ecosystem. Obviously, the man is biased. I mean, he put 40, if you look at the percent that he moved, and people are like, why didn't he put more funds in the Pulse ecosystem? Because he wants to use Ethereum yield to help. Do you understand how much yield he's going to get every single year? I mean, I feel like this is a no-brainer. I feel like this is a no-brainer. And he's going to be able to continue to pump. But if you just look at the percentage, let's just say, I think, what's the biggest number I saw in Money Game? 170 million. So if he put 40 million in, I mean, that's like 25% of everything that he moved. On these large numbers, that is beyond a bet. That is, I mean, and if you agree with me, do me a favor and smash the like button, ladies and gentlemen. But he moved those funds over there into the Pulse ecosystem. Of course, Pulse pumped like crazy yesterday, which has been amazing. I'll come here for liquid loans. I mean, I think this is one of the best numbers in all of crypto. And you don't have to agree with me, but 100% APR, 100% APR. I mean, come on. Where was it? I saw Big Smoke. He asked a question. He said, are you making more off trading or liquidity providing? I'm only providing a little bit of liquidity on Peapod Finance, Big Smoke. But here's the thing. There's nothing, unless I'm going to, provide liquidity for like ETH and Bitcoin, and they say correlated enough, and I do concentrated liquidity, and they continue to go up. Maybe with appreciation plus yield, I may get some big number, maybe. But in USD value, there's nothing that's going to pay you 99% APR. Now, part of this obviously is an inflation yield. This isn't a complete full yield. It's just liquidloans.io, brother. Liquidloans.io. It's not even there's no referral or whatever, I don't think. But it's liquidloans.io. But I will shoot you a link later, Imtron. If I forget, just remind me. But anyway, it was 100% earlier. Now, part of the reason this is so high is just because of loan token and Pulse appreciation, etc. But 99%, I mean, I think the lowest I've seen it so far is 93%. It will continue to tick down, but 99% compounded daily. This is APR. The APY on compounded daily, well, 120, 150, maybe even higher, 160%. I mean, that's bonkers. That is absolutely nuts. I got a buddy of mine who's like, I don't know where to move I got some funds I want to put into crypto. I don't know where to move it. I'm thinking, I didn't tell him what to do with his money. It's his money. But I'm like, if you're going to take profits in USD, at least part of that, a third, 50%, something. In my opinion, I'm putting it in this protocol. Why? Where am I going to make this in USD value? Where? And the staking pool is paying out 58%. You can claim this every day, every moment. You can do whatever you want. You can claim this. It's crazy. I need to do a dedicated video on liquid loans because I don't think enough people understand what's there. Again, not financial advice, but the protocol is going to have to get wrecked. I think they've created one of the better stablecoins that exist. This thing is fully decentralized. It's incredible. All right, let's come over. These numbers were big when I started the screen. They've reset the daily percent values. But Inc is up 13%. It's up more than that. What is it? What was it? 26% earlier. Yesterday it was about $3, I think, 3 and some change. Those of you holding the Inc token, this is one I've never held personally. I know Imtron has held it. Those of you who held it, that's awesome. Mtron said, I'm done taking profits in USD for now. I'm taking profits in Sats. That would be interesting. I'd love to talk that through a little bit and get your rationale for that, Mtron, because the thing is, we're at the top of the market. Like, this is when you do take profits. Typically, most investors are taking profits now in USD, not unless you're just hell bent on growing your BTC bag, which would make sense. I mean, I think most people in DeFi, I hate to use the word degen, but some of it is degen. Let's be honest. But I consider degen legit, like ROI dApps that are going to collapse. BingX is probably degen, probably Titano X is probably degen. I don't want to say for sure, but they're probably going to be degen. But if you just say the higher risk DeFi space, most people are underexposed to Bitcoin. Everybody's chasing the next big altcoin, but they're underexposed on Bitcoin and Ethereum. You can chase all the altcoins you want, but if you believe like me that Bitcoin's going to do a 10x before it's over with, it's going to at least do a 10x, if not a 20 or 30x, then you need to make certain you have Bitcoin. That is, if anything happens in crypto, in my opinion, that is the most for sure bet that you could possibly make. Period. Mtron said he's long on Bitcoin. My Bitcoin bag is for my kiddo when she's 18. Or gotcha. Yeah, I get that. I can get that. Okay, that's why every investor has to make their own decisions. Because by that logic, no matter the price of Bitcoin, whenever you can get it, you want to get it, kind of thing. I mean, everybody needs at least one Bitcoin. Truthfully, everybody needs at least two Bitcoins. You need one to cash out and one to hold on to. Period. That's just, that's my thought on that one. All right, let's make some trades. Let's get started. Couple of things here. Let me click the refresh button. By the way, there's a link for BingX and the traders that I follow. I primarily use BingX for copy trading, but that link, it is a affiliate link. You'll be supporting the channel, and I greatly appreciate it. And if you don't want to click on those links, then at least click on the like button. All right, like what I did there. Now I'm going to show you, I don't trade derivatives a lot. I only do it when I think there's big macro moves, and I normally do it with a significant small amount of my portfolio, meaning a proportionally small amount. I'm going a little bit heavy, and it could bite me, but I'm going a little bit heavy on this trade here that I'm about to make. I'm about to add to it. I mentioned this yesterday, but I figured I'd do it on camera today. So this is Bitcoin. I want to come to ETH here. And again, this is on my BingX account. I've got a great trade running over here. I normally like to see a daily red candle. It looks like we're going to have that. It's going to close here. It's going to be a red candle, most likely, and this trade is killing it. It's a small trade. I haven't bet the farm here. I mean, I think there's $325 in that trade that's currently, has an unrealized value of $509 is the profit, unrealized profit. So the total here is, what, 8 whatever, 726. Anyway, now I'm going to take, I see, these two are 726. So the position, I put in $325. I'm in profit by $504, unrealized profit. I'm about to add 400 to it. Now, when I do this, I come over here, I'm at 9. By the way, I was at 10. I started to make this trade, and I thought, you know what, let me just do it on camera. I was at 10. Okay. Click confirm. Okay. Then, so we got 10x, but I got roughly, let's see. So I got $400. The thing is, the liquidation price on that is 24. Actually, that's not bad at all. That's not bad at all. It was earlier, the liquidation price was higher. I want to be under this mark here. I feel like this gives me a good margin of safety. I'm seeing a little bit of support here with these candles, so I want to be under that. I was going to do 9, but now I think I'm going to do 10. The market's pulled back a bit more, so it's allowed me to get lower because my estimated liquidation is 24. That's low. You know what? I could actually increase that leverage. What does that get me to? Let's see. I don't actually want to use the full amount either. that. That's crazy. My liquidation is still. I'm not willing to go any higher on that. Let's just go. Let's go with that. There we go. So we just added some funds in the market. Wait for that. All right, let's see what happens. That's much higher than I wanted. All right, good enough. I can look at that later. All right, let's come over here to options. So, ladies and gentlemen, this is crazy. A lot of people don't know how to trade options, and I sell options way out of the money. And if you watched yesterday, those options expired worthless that you were seeing yesterday. And that's what you want. You don't pay any fee when they expire worthless. They just expire worthless. So basically, when you sell options, you basically are selling someone the right to buy or sell a stock, and then you basically just make profit. It's crazy. I'm oversimplifying that. Let me just show you what I'm doing. So we're down a little bit. When the market's down about 2%, I like to sell puts. It's basically going below the market. So let me just show you, without giving you a full breakdown what's going on with options. I do have a link to Lyra protocol in the description, but I'm going to show you in a moment. Basically, I'm trading here essentially for free. I mean, I'm making a profit on trades is the truth. So I want to sell puts, which is below the market. I look at the delta. Delta is roughly the percent of you losing on that trade. So roughly I have a 10% of losing on this trade. They're saying currently based on the volatility mathematically, and this is how all options work. There's a 10% chance by March 8th this goes to 3,050. 10% chance. I'm actually going to do, so if I place this trade, let me just show you this. Let me just show you the gains you can make. So if I go to place this trade, it's going to require 445 margin, meaning it's going to use up my $445 of my buying power if I make this trade. Now here's what's interesting. That means I'm going to potentially earn 3% on this trade. Potentially. Which I'm going to take that position. If it expires, if March 8th comes and we don't get down to 30,000, what is it? 30,050. 3,050. If we don't get down to 3,050, then I'm going to be able to keep that money. As soon as I open this position, I'm selling that option. I get the money immediately added to my collateral. In fact, I am going to take this trade right now. Watch. And I'm going to earn 30 Lyra tokens in rewards, 30.5. I'm paying a $3 fee, but I got 30 30 Lyra tokens. By the way, take a look at this real quick. Where's it at? Calculator. 30 Lyra tokens times 0.12. That's $3.60. $3.60. You're basically trading for free. It's saying that the fee is $3.70, and I didn't include the 0.5. So that's another 6 cents. Like maybe it cost me 10 cents in that case. Lyra tokens right now, just so you know, or the Lyra price, it's 12 cents. 12.1224. So I mean, you're basically trading for free, and sometimes trading at a profit. So that's pretty insane. I mean, that's pretty insane. I will add liquidity to this position, by the way. I wasn't paying attention to something I did there, so I'll definitely be adding liquidity to that. But let's come back over here. I have essentially made what 3% on my money. That's right now. Meaning I've already made it. Look, they've added it to my collateral already. So as long as, and you see, if you see here, this is the current value of my positions, but as these positions expire, these are some longer term trades that I made. As these positions expire, I get to keep that profit. I could close these positions out early if I wanted. I would have to pay a fee to close, which would affect, that profit that you see there. I would have to pay a fee to close, but I could close early if I wanted. I always try not to close early. So let me show you another trade. And you can trade Bitcoin or Ethereum. The great thing about Lyra is more on chain. Now those of you, Lyra has a lot of regulations about where you can be located. So like if you're in the US or I don't know, some places in Europe, it's hard to use Lyra without using a VPN. I'm probably not supposed to tell you that, but so yeah, you can do shorter term options. The shorter term you go, the riskier it is, but they also pay better premiums in many cases. You can't get as far out in the market. And I'll show you what you do if a trade goes, or what I do if a trade goes against me. But for example, let's go to March 3rd. What's that, like 2 days out? Let's go to put. We can do the same thing. We can look at around that 10%. I like to be at 0.13 delta or less, ideally. So will this market, the idea is I always try to sell when the market's down. The idea is get you further down in the market. And the expectation is the market's not going to keep going down. It's going to turn around. That's the idea. That's the theory. That's the hope. So like right here, if I were, this is 10%, 32.50. We're talking about 2 days away. 2 days away, if I wanted to, and I may, let me look at it. I could come over here. I could say, okay, I want to sell. I'm not going to make a big profit. Where's the fee? Okay, so I'm not going to make a big profit, but again, I'll get the rewards that offset that sum. But here you go. The margin required is still $445, and I'm going to get a 95-cent fee. So let's just say $2. It's a little over $2, but let's just say it's $2. It's like $2.60, I guess. Yeah, $2.60. So let's just say it's $2.60, but it's $2.60 made on my $445. That's a 0.5% earned in a 2-day period. I mean, you could do that over and over again. Yeah, theta does make you profitable. Correct, Big Smoke. That's exactly right. So that is so yeah. So let's open this position up. I'll do it. Shoot. I'm getting myself very directional. I try to trade both sides of the market, and what I do is I don't eat up all this buying power. I always do like I'll put a trade or two on, and then I'll wait a day or two, let the market move a couple percentage points in one direction or another. I'll place a couple more trades on. That's sort of how I do it. And I love to see trades expire. So that's why I like to do a little bit. I like to do kind of the 1 to 2 week out. So like March 8th, March 15th, and then I always have a couple little trades, definitely less than $1,000 usually, trading these close to expirations. And what I'm trying to do is just give me always a little bit of funds coming in. So this is more the closer you are in the market, the closer to expiration, the more risk you have, because the price of your option can fluctuate a lot more with price movement. See, we're already moving right here. See that? Let me go ahead and place that trade. This is already less profitable because the market's moving the other direction. So it's just very interesting. Now, what do you do if you get in trouble on a trade? So let me show you like a typical trade. I would say the 8th or even March 15th. Let me just show you. And you can trade calls or puts. We'll just stick with puts for now. Let's say by March 15th, I did not think there's any way we're going to, and I kind of like this because it's under 3,000. I feel like we're definitely going to, I feel that, there's a strong probability, of course, it's roughly 90% probability that we will not drop to a 2,900. And my market bias says ETH isn't going to drop to 2,900, period. That's my market bias, right? So I may come in here and say, okay, I'm going to need $445. Obviously, I have that in my buying power, and I'm going to make $19. That's what I'm going to make, minus roughly $2. So that's $16. Is that 4%? I mean, if I'm making 1% a week, which, by the way, when the market's been volatile, you make a lot more. That's just how it works. When the market has been volatile, so we're making insane funds right now on these options. So, you know, it was just 19 there for a minute. So this is showing the margin required. This is showing you what you're going to receive, and of course the fee. And this platform is in full development. They keep making updates, and it's a very interesting platform. And most of this is done on chain. They have their own like Lyra chain, but it's sort of a private chain. But I'm told it's a legit blockchain, like it's an actual blockchain, because you have to use your MetaMask, and you'll see when you try to sign in, it'll make you sign a permission, and you make deposits similar to you would on any other platform, but those deposits are on their Lyra chain, and then you're able to just to trade quickly without having to wait for long transactions, which is one of the things that makes it very, very interesting, very interesting. But liquidation price is way down here, 1,000. That's crazy. Um, like liquidation meaning that you just don't want to get liquidated. And the reason that liquidation is so low is because I have a lot of buying power. So that to me feels like a very safe trade. Let me just show you what I do. And obviously this is just me kind of talking through it, spitting off the cuff here a little bit. But let me just show you how you handle a trade if the market suddenly starts dropping. And I will tell you, when you're in these close periods, a week or less, and the market moves 3 or 4% against you, it puts your trade in trouble quick. So I'm always watching the market. Anytime I see a big move in the market suddenly, like I wake up in the morning and the market has moved 3, 4, definitely 5%, then I know I got some work I need to do. And I don't get too stressed out about it for the most part. I just go to work. And what does the work look like? Well, I would come here to my portfolio. I would look at positions that are probably at risk. And then I would just simply, let's go take this one, for example, which is obviously not at risk. But I would come over here and say, oh, March 8th, Bitcoin, 48,000. Okay. Options, March 8th. Let's go to Bitcoin. 48,000. That's a put. Let's do it this way. It's easier to see. 48,000. I'm not in trouble. That's a 0.01 delta. That's a 99% chance that I'm going to make full profit on that thing. But let's just say I said 0.3. That's my number. 0.29, 0.3. Then what you want to do at that point, I'll show you. Let's show you with another one. Let's show you something that is at point. Let's say this one. 59,000 is 0.28. You would probably be losing money on this one. And let's just say I'm losing 50, 60, $70. Then what you would do is and I only pay attention to my deltas. I don't care what this price says. This price could say it's 300% down. But if my delta is still good, meaning I'm at like 0.15, I don't care. Because theta, time decay, works in your favor over time. But when we get to 0.23, I'm sorry, 0.3 or 0.29 or 0.28, I'm going to do something. I'm not going to wait. And what I do is, so we can see right here, and I usually trade Bitcoin in 0.1 lots. So it would be $78 right here. And let's say that I paid, I don't know, let's say I paid $110 for it, right? So whatever that is, 110 minus 78. So I need to make back $32 plus fees because I'm losing that, right? So what I would do, and it's probably about, let's just say it's $40 I need to make back. What I would do is I would come over here, I would close this out, and what I always do is look at my collateral because that makes certain that you include all your fee calculations properly. I write down what my collateral is before I close a trade. I close it out. My collateral is going to go backwards a little bit. Let's just say it goes backwards by $32. I'm like, okay, I need to make that back. And then what I'll do is I'll put a new trade on. And what I might do is I'll go to March 15th. Right now it's paying, say it's $800. I'll go to March 15th. 59. What was it? 40. What was that? 49. 59. Okay. March 15th. And then I'll be able to go further down in the market. So you see it's higher there, but I can go down here to 58 and get a little further out of the market. I might be able to go to 23. I'll look at the market and be like, hey, can I sell that? If I sell 0.1 of that, is that going to give me enough profit to make up my collateral loss? And it probably would. And if not, I could always go out to March 22nd. Now I'm showing you a simplified version of this. The truth is sometimes I'll sell on both sides of the market. If I'm like not certain of which direction the market's going to go, it's called you roll out your option. So sometimes what I'll do is I'll sit here and I'll say, okay, maybe I've got 0.2 Bitcoin. I'll take 0.1, I'll roll it out over here and sell a put, and then I may also sell a call and get it pretty far out of the money and try to make some money there. And so in this case, you make roughly 50 bucks on the call with a 14% chance of losing the trade. Hopefully that makes a little bit of sense to you. But the crazy thing is, you're making rewards. They're estimating that we're going to get 16 Lyra for every $1 in fees when it's all said and done with. The price right here is 122. So 16 Lyra, guys, look at this. 16 times 0.123, $1.96 for every $1 in fees. That's what they think it's going to end up being. That's crazy. Then your fees are profitable if that's the case. Now right now I'm way in profit, but this is going to go down because of course this whole pool is distributed among everyone who everyone's trading fees. So that's Lyra, and I can go more in depth on Lyra if you want me to in the future. But that's Lyra. This is my trading account here. Just looking at my positions. Okay. All right, ladies and gentlemen, we're going to wrap it up. Thank you so much for being here. Appreciate you. Do me a favor before you leave. Do me a favor and smash that like button. Have a great day, everyone. And be careful. Be careful in this crazy crypto market. It's a lot of fun. It's a lot of fun, but be careful. All right. Take care.